Commonwealth Bank have just announced a 0.5% increase in their variable rates, but have given a bit of a sweetener, reducing one of their fixed rates by 1.6%. So today we're going to look at exactly what the news is, and more importantly, where the rates are likely going. Because I have to say, this is quite exciting. We've seen now for the second day in a row, where yesterday we saw Macquarie reducing their fixed rates. Now we see Commbank reducing their fixed rates. And it's very exciting because it seems like there's a bit of a shift where we're expecting rates to go. So let's jump in and find out from the top what's happening with the rate announcement. And Commbank's announcement says that on the 2nd of August, RBA increased the cash rate 0.5% to 1.85%. As the cash rate is one of the factors that affects their costs of fund, they've decided that their home loan variable rates will increase by 0.5%. And again, that's from the 12th of August. These changes will apply to all product types, including all work in progress applications. So if you've got an application in with Commbank and you're on a variable rate, even if you've signed the documents, you've signed the loan contracts, your variable rate will increase. Even if it says it's lower on the loan contract, remember it's a variable rate. So on settlement, it'll increase as per the correspondence here. Now, the thing that I find most exciting is the fixed rates. They've just announced that they've got a special 4-year owner-occupied principal and interest fixed rate home loan of 4.99%. So it's really awesome to see that that's now coming under 5%. And it's worth considering whether or not going for a fixed rate is for you. Keep in mind a few things. Firstly, that fixed rates by and large will limit the amount of money you can put into the additional repayments. That means that on top of your minimum, typically you can only pay between $10,000 to $20,000 in additional repayments per annum. So if you're looking to pay off your home loan quickly, you might consider having a portion fixed and variable. That'll allow you to have best of both worlds. The other thing to keep in mind is that if you do fix it in at, say, this 5% interest rate, if rates do go down over the next 4 years, that if you break that term, so let's say that you've fixed it in for 5% and rates come back at 3%, well, then there's a break cost. It's hard to say what that break fee is. A lot of it comes down to the duration that's left on your fixed term and the amount of money you're losing the bank. But something to keep in mind. So if you are looking to upgrade or sell, or even wanting to pay down the mortgage, you're expecting an inheritance, then fixing may not be for you. So beware of a few of those things when you are considering a fixed rate. But this is really exciting news because we have been hearing a lot about peak inflation. We're expecting to see peak inflation by the end of this year. And as a consequence, there are a number of predictions where the banks are saying, and the big banks have predicted, that by mid to late next year, we can expect the cash rate to start to down. And once that starts to fall, we'd expect the variable rates to start to fall in line. And we saw this previously where the fixed rates were the canary in the coal mine, where we saw those increase first, and then the cash rate and the variable rates were to follow suit. So this is an indication where the market is predicting the rates to go. And we've seen the ASX futures markets also predicting this to be the case. So there's quite a number of factors now really solidifying that it is expecting, or the markets are expecting, rates to come down. And for us, it looks like that's definitely going to be the case over the next 2 years or so. Now, if you are currently applying for a home loan, some things to keep in mind with a fixed rate is that the fixed rate will be upon settlement, not upon application for most lenders. So you can take out what's called rate lock. And what it does is it means it's locked in as of application date instead of settlement date. So in most cases, that's 90 days. It'll allow you to know exactly what rate you're going to get. So if rates were to change between your application date and settlement date, typically that's when they're going up, that you'll receive the lower, so the one you applied with. And this is just a really quick video to keep you guys in the loop with what's going on. The market's changing very rapidly and we're starting to see there's signs of relief. So really, really good news. And if you do live in Australia and looking for a great mortgage broker, we can help. We're mortgage brokers who service across Australia and don't charge a fee for our service. So you can reach out and visit us online at huntergalloway.com.au or call us on 1300 088 065 and we'd love to help. So until next time, I'll catch you then.